Our next show on It's About Money, we'll be talking about opportunities in real estate, and our guest will be Bernie Fallon. Stay tuned for our next show on opportunities in real estate. Hello and welcome to another edition of It's About Money. I'm Nannette Nocon and thank you for joining us. We have a wonderful guest today, Bernie Fallon of Fallon Associates, and we'll be talking about opportunities in real estate. Bernie, thank you for joining me today.
You're welcome. Thanks for having me.
It's early in 2010 and I want to talk about the state of the real estate market in our community. What is going on? Would you call it a buyer's market or a seller's market?
It is definitely a buyer's market. That is evidenced by the amount of inventory that's out there. Fortunately for us in this region, the market has stayed stable. We have not experienced the amount of foreclosures that other areas of the country have experienced, and prices have increased modestly.
Yeah, that's good news that there's stability. The bad news about that is when the real estate prices are going up, we don't participate as well, but we also temper the declines that other areas in the country are seeing.
That's right. The good news is interest rates are still great, and what with the new tax credits that were started last year, it definitely makes it a great time to buy a residential property.
So let's talk about the tax credits you've mentioned. That's available, was going to be available until the beginning of December, but now extended through May 2010. Would you talk about the tax credit first, the first-time homebuyer tax credit?
First-time homebuyer tax credit, you are allowed to take as a tax credit on your IRS return up to $8,000. For single people, there is an income limitation of $125,000. Married couples, $225,000. That credit phases out over income increases. Phases out to zero at $145 for single and $245 for married.
So a person who's single and makes more than $145 cannot take advantage of the $8,000 tax credit, and a couple is $225.
That's correct.
Okay. $245, excuse me.
Mm-hmm.
So what does that mean, though? What does a tax credit mean? I know you're not a CPA, but what does that mean in real money for the buyer of the home?
It's not a write-off. It's a direct deduction.
Mm-hmm.
Very quickly, if after doing your taxes you did not owe any money, federal taxes, that would be an $8,000. If you were entitled to the $8,000, that would be an $8,000 check that would arrive in the mail.
Yeah, that's great. And you know what's interesting is most people don't realize that you could actually apply for an amendment on your tax return and not wait till you file your tax return for that year.
Yes, you can amend your taxes to try to get at that a little bit sooner. However, I had just seen an article just before our get-together here this morning. CNNmoney.com said that the government has delayed filing for the credit through the end of last year, and people can expect a delay of up to 3 months, even if they tried to amend their returns. I just saw that this morning, it's unfortunate. The other aspect, too, of it that caught my attention was that you are not able to electronically file. You have to do the paperwork.
I see.
It has to be a paper filing, and there's some other rules associated with it, too, that they've made it a little more difficult. And the whole intention of it is to try to avoid fraud.
Sure. Well, and then it actually slows down the economic activity if people were counting on that money. So.
That's right. That's right. I mean, that is a real selling point to people that money can help offset closing costs.
Right. So there's the first-time home buyer credit up to $8,000, and that's a percentage of the purchase price, correct?
Right, up to 10%.
Got it. So if they bought a house for $40,000, they could only get $4,000 back.
That's true.
Right. Okay. I mean that in our community, homes can still be bought for that. Not that many, but.
and actually, and I'm sure you were going to get to that point. Right now, homes under approximately $125,000 are moving briskly these days for first-time home buyers.
Sure.
It's what with the economy and the credit tightening up, that market is still very strong here for people buying first-time homes in that range.
Right. Okay. Now, what about the existing homeowners, they also have a tax credit now available until May, right?
Correct. That was once upon a time known as the step up, step down tax credit. That's $6,500. Same limitations on income, same limitations on purchase price, same deadlines too this year.
Okay, but there's some caveats to that. For first-time home buyer, you really shouldn't have owned a house in so many years prior to buying another house.
3 years.
3 years. And then if you are a step up or step down purchaser, you need to have owned a home for 3 years. Is that correct?
5.
5, okay.
5 out of the last 8 years.
Okay, all right.
So that, yes, there is that stipulation.
So you couldn't have just recently bought a house in the last less than 5 years and have that issue.
No, and I have a client right now that is in that situation that he is not going to be able to take advantage of it because
Right.
he's owned it less than 2 years.
Now, in my background, financial planning, one of the things I talk to clients about is making sure that they have the resources to buy the property and not count on it. That's sort of a bonus to get that. So for many people, if they cannot afford buying a house without the credit, it becomes a challenge if they're not going to get the money right away, or it might be tight later on. But it certainly is a good way to stimulate the purchasing, but then you have to look at the economics of it in the whole picture.
Yes, buyers have to work with a good mortgage broker or lender directly to make sure that they can afford the property. Some of the problem we find ourselves in from a few years ago was related to people buying more than they could afford.
Yeah, and I think there was a conflict too, because if you look at somebody loaning money, they want to loan as much money as possible. But then you have to look at the entire picture to say, can you really afford this in the long run? Not just a snapshot.
That's right. You don't want to be house poor.
Yeah. No, you mentioned about the properties below 120,000 moving briskly. So if you look at the inventory today, it's probably fair to say that we have more sellers for the homes that are above that price. Correct?
Yes, as I mentioned earlier, the inventory right now, if you take a look at, for example, the Saturday real estate section or homesteadnet.com, there is a large inventory of homes out there. It's kind of basic law of supply and demand. Right now the demand has gone down somewhat. Henceforth, it's the buyer's market. It favors the buyers because of the interest rates. The pool of buyers is smaller right now. It's driven up the supply. The luxury homes, the homes that are in excess of 500,000, they're taking longer to move. Mm-hmm. Yes, they are.
Sure, it's harder. With unemployment being higher, it's tougher.
That's right.
Now, many banks are also going back to looking at requirements that are tougher than prior to the crisis. Can you talk a little bit about what the requirements are for down payment these days? What should people be looking at before they even think about?
Well, FHA loans are the most affordable in terms of down payment, and you could be looking at 3% down. The requirements for credit have stiffened up quite a bit, so to speak. Whereas a few years ago, a credit score, say 650 or so, would have worked. Now it's more like in the 700 or 700 range to be able to get the loans.
So then that's the case for whatever type of loan, whether it's FHA, Fannie Mae, conventional.
Or conventional.
Right.
And in terms of commercial, I know we're talking more about residential right now. Commercial has even gotten a lot stricter. The commercial credit out there right now is
tight.
Very, very tight.
Yeah.
Very tight.
Yeah, because it's an issue to contend with when we move into 2011, when there's a lot of balloon payments that are due. Yeah.
As a quick aside, the commercial mortgage market and commercial real estate market in general, it's going to get very interesting later this year.
Right.
When these adjustable notes come due.
Mm-hmm.
I hold on to your seat.
Yeah, it could really be problematic. Mm-hmm. So let's go back to the loans. So some are still only requiring 3%. That's FHA, but conventional typically requires 20%. Correct?
No, it could be less than that. You may be referring to investor type loans that used to be at 20%. And now those are more like 25%. So if you wanted to buy residential property for investment purposes, it's more like 25% now.
I see. But for homeowners, you still are able to get a lower down payment.
Right, right.
Okay.
I mean, it could be, anywhere from, in the range of 10%.
Right. So, it's interesting. The Sunny May program is still available. Can you talk a little bit about that, how that might fit into first-time home buyers? Because there's a little bit of a benefit there, right, with government rates being low and so on. It could be a natural for somebody. I know you're not a mortgage lender, so that's...
And I to be quite frank, I haven't done many Sunny May recently, but yes, that program is available. Rates are low, and the down payment is too. I mean, it's effectively kind of the state version of an FHA loan.
I see. Okay. So it could be attractive to certain home buyers below a certain price range.
That's right. That's right, to help make it more affordable.
Now, would be in the past? I remember like 20 years ago, when home prices were moving up so rapidly, inflation was really kicking up. People were buying homes, turning them over within a couple of years. But then that doesn't seem to be the case these days because it's a little bit flatter market. Right.
Appreciation, I think, is more modest these days. If you're I think maybe you're referring to where someone could buy a home, it would appreciate dramatically or significantly, and then they could in turn sell it a short time later and recoup primarily their upfront fees and closing costs. Yes, that's not the case anymore. I generally don't, or I should say I recommend that people consider holding a home for at least 5 years. If you are going to consider getting out of the property in less than 5 years, it probably isn't going to be worthwhile because of the upfront fees and closing costs.
Oh, sure. I mean, because you have mortgage, expense, all those for buying, and then when you sell, you have to pay all the different fees as well.
State fees, attorney's fees,
realtor fees, yeah, right. So there's a lot.
Inspection fees.
Right. Yes. So you have 5 years. So really, you want to buy a house because you want to live in it, as opposed to flipping it, because those are probably gone those days.
Right. Yes, the people still do flipping. However, that's a tough business to get into. You have to know what you're doing. Time is of the essence. You have to buy them on the low end and turn them around quickly, not invest too much in them, and then turn around and get your money back out as quick as you can. So, I do know people that are still doing it, but yeah, that's a tough business.
Sure. I mean, there's some opportunities if there are foreclosures, but you have to have cash, you have to have the energy, you have to have the people to help you revitalize that house.
Foreclosures and short sales too. And a short sale is basically where the house is worth less than what's owed on the mortgage. Right. There's a gap between the two. And depending on the borrower's situation, they may be able to negotiate with the bank to pick up, the bank may consider picking up that gap, that shortfall. However, you have to be in a distressed situation, and there's a whole process associated with short sales.
Oh, sure.
And they can, at times, have a tendency to take a long time. I've heard of them going as quickly as 6 to 8 weeks. I've heard of them taking as long as 6 to 9 months. So
these are for people who overpaid for their homes at the time they purchased it, and then selling them for less than the market less than the value of the home.
The term you'll hear is upside down. They're upside down between what's owed on it and what the balance is on the mortgage, and so that gap puts them in a tough situation. That's great. Thank you, Bernie.
We're talking with Bernie Fallon of Fallon Associates, and we're talking about the opportunities in real estate in 2010. Stay tuned. We'll be right back.
Ah, the comforts of home, of gathering around a meal, spending time with loved ones in a safe, warm place. Millions would love to live in a house just like yours. Maybe they already do. Learn how to protect your family at pestworld.org.
Welcome back. I'm Nannette Nocon, and it's about money. Our topic today is opportunities in real estate, and my guest is Bernie Fallon. Thanks for joining us. So Bernie, thank you again for being here.
You're welcome.
We ended the first part of our show talking about short sales, and that seems to be a problem with some of homeowners who bought and paid more for their homes than the value of the mortgage at this time. That seems to be a problem across the nation, but not so much in Rochester, right? It's been happening, but not as prevalent.
That's correct. Because we didn't have the bubble here, the great appreciation in prices, the overvaluation, we didn't experience the bubble bursting or the depth that other parts of the country have, such as Florida, Arizona, California. It's a good thing. And actually, from an investor standpoint, Rochester, I had seen a report, I forget which website I saw it on, but Rochester ranks in the top 10 in terms of stability of property prices and investment value for investors.
Sure. It seems we could fetch quite a bit of rent payments, rent income from real estate that's bought in Rochester, right? That's pretty good. Now, okay, let's say I'm a first-time home buyer. I'm thinking of buying a house. What are the things I need to be doing, and what are the things I need to be thinking about?
Well, we need to make sure that your job situation is stable. Obviously, employment has had a major impact on the real estate market. People have to have steady paying jobs to be able to afford a mortgage. So along those lines, what I would recommend is that you speak with a qualified mortgage broker or lender and let them run through your what's known as pre-approval or pre-qualifications to be able to afford a loan. They will run you through the process, take a look at your income, your debt, and your credit situation. They'll recommend a number to you that may or may not be in your future, so to speak, and by that I mean they'll give you what they think the top amount is. You don't have to spend that amount.
Sure.
It gets back to your comment about affordability and making sure you understand your finances. So I will tell people that let them suggest a recommended price, but then when you and I will work together to understand, what you want. Then the next thing would be location. What type of house you're looking for. If you have a family, if you're thinking about starting a family, that would relate to the school district. If you have those in the immediate plans. I would recommend that people maybe do some drive-bys to get a feel for the neighborhoods. Usually in the afternoon, 4 or 5 o'clock in the afternoon is a good time to take a ride by to see some of the activity. People are usually coming home from school and work. But what's most critical would be working with the mortgage person to be able to have what's known as a pre-approval letter, so that when you and I start to look for the home of your dreams, you have that in hand. When we make an offer, it will show represent the listing agent and the seller that you have been put through your paces by a financial institution, and that you actually are pre-qualified for the mortgage.
So it makes you a stronger buyer. So if somebody else is competing for that home, if you have a pre-qualification letter, you have a better a chance of.
Absolutely, it's a requirement. It shows once again those parties that are involved on the sales side that someone has taken a look at your income, your debt situation, and your credit. All three of those are critical to be able to obtain a mortgage.
So you need to get the help of some outside people before you even.
And I can recommend. I work with some very good mortgage bankers, and if someone needs help with that, I could point them in the right direction. Sure.
Yeah, it's nice that when you're in a professional business that you have some other professionals that you could count on to do that. So let's say I own a house now and I'm interested in selling it and then buying another house. What do I need to do to prepare for that, with or without this tax credit? You know what I mean? That's just, I think, good planning.
Well, in my opinion, the majority of buyers these days would like to be able to know that a home has been well maintained and well cared for. So you want to make sure that you're presenting the home in the best light possible. Painting has to be up to snuff, all your finishes, your carpet, windows cleaned, staged if you need it to be staged properly. It needs to put its best foot, the house needs to put its best foot forward for sale. So, and obviously improvements that you've done are a big selling point. Any energy-related improvements such as windows, insulation, so on and so forth. Buyers these days the majority, this gets back to my opinion, I believe, want to go into a home that they don't have to do a lot of work to. That's been my experience.
Unless you're an opportunist in terms of, but for the most part, people don't really have the skills to.
The majority of people, and it's time too, it takes time to do some major reworking. Not to say that there aren't people out there that are very handy. I know a number of buyers like that, but generally speaking, people want to be able to turn the key in, turn the lights on, sit down and enjoy the home. So you want to make sure your home is ready for sale. The other aspect is to engage a good real estate agent or realtor to put a market value price on the home. We do what's known as a comparative market analysis that will allow the home to be priced competitively in the marketplace. The last thing you want to do is overprice your home thinking you want to test out the market. That could drive away your first wave of buyers who potentially could be your best.
Sure.
Usually the first wave of buyers are generally the best.
I see.
If for some reason they have an interest in it and have gotten to it first, you don't want to discourage them by asking too much for your home.
Right. So the pricing is really critical, because then you might throw out a potential serious buyer because it was overpriced, sometimes even by just a couple $1,000s.
That's right. And back to the comment about it being a buyer's market, you're competing with all the other sellers that are out there. And if you have your home overpriced, you're automatically putting yourself at a disadvantage.
Sure, sure. Yeah, that's right. Because you have more competition. It's unlikely, or it's not as likely to get multiple offers on a house for sale unless it's priced really well.
2-3 years ago, when the mortgage money was available, people were stepping over each other, bidding up homes because the pool of money was available. That's not the case anymore. It's more the pool of buyers now is smaller. So the sellers have to make sure that they are pricing their homes competitively to attract the most interest in offers.
Sure. So then when you're preparing your house, first you want to make it look clean, you want it well taken care of, probably reduce the amount of clutter. And then some people say take down your photographs of your family so that they're not looking at those photographs, but instead just generic look and stuff like that. I'm watching too much home decorating shows, I think.
Right, HGTV.
Right. So, but at any rate, so just preparing for those kinds of, to make your home appeal attractive to potential buyers.
That's right. You want to have the people that go through it be able to picture themselves in the home.
Okay.
So if you have personal artifacts, mementos, etc., yes, it's good to put those away.
So now, is it typical for a realtor to go over the numbers with the seller so that they might be facing an upside-down situation? You know, like.
Yes, the term is a net sheet.
Okay.
I would sit down and if you were selling your home, work you through a potential sale price and then the associated costs with it, what equity you have in the home, so that we can come down to a bottom line, what amount of proceeds you hope to walk away with after fees and costs.
So then, of course, the amount of money you walk away with is influenced by the amount that the price you sell it for, whatever that price is.
Obviously, right.
Are there any other factors that might influence that, or is it generally just, okay, well, it's the price of the home? What other reasons would it make the homeowner who's selling lower the amount of money that they net from the sale of the property?
Well, a lot of it has to do with what their next move is and what kind of pressure they may be under if they're buying a replacement residence, trying to take advantage of the tax credit that's due later this year. Then they're under the gun to be able to sell. That would be one good reason right there to be able to cause a seller to take a lower price. And quite frankly, after a period of time, if feedback from the marketplace, other realtors, buyers, your agent representing you as the seller, you're hearing you're overpriced, then you should take that into good account and adjust accordingly.
Sure, right. Because I think it's difficult these days, or any time, for a buyer to make such a substantial reduction in their offer for the home. Right? I mean, it would be ridiculous, for example, to say, okay, you're selling a house for 100, I'm going to offer 70 for it. I mean, that's really out of line. So it's not like you have to put it within the range that a buyer would be comfortable in making an offer.
And that's where a good realtor comes in, representing you as a seller. That lowball offers is the term, need to be understood from the standpoint of possibly offending the seller. That's why you would hire a real estate agent to represent you on both sides, seller and buyer. We are the ones that go back and forth with each other to try to make sure that people's offers are grounded in reality.
Sure, yeah. And so is there anything else that someone should be gathering information for the house? I mean, there is a tax due if someone makes a substantial profit from the sale of their home, but for the most part that doesn't apply for residents in our community with $250,000.
No, not here, right. No, in terms of preparing for a sale, make sure the property's in as good a shape as you're able to have it be for the prospective buyers, and hopefully you'll have an idea of where you want to go for your next move. The term is a contingent offer, which is a difficult thing for sellers, and that if they want to purchase another property, that having a contingent offer out there based on the sale of their home puts them in a less than favorable position. So if you're able to avoid that, that's a good thing. If you have enough proceeds, financial equity to be able to do it, then that's what you'd want to do, not have that contingency.
Sure, sure. And one of the other issues too is when people are buying a house, I think they need to look at the potential cost that they might have from the house they're buying, that they need to come up with those funds, you know. Sometimes people become, their cash flow becomes too tight and they realize, oh goodness, I have to make all these payments and I don't have the money. Besides the mortgage and the taxes and the insurance, there's potential other issues like that what people don't know about when they buy a house.
Well, your mortgage person, and actually a realtor could run you through kind of a back of the napkin pre-qualification, if you will. 28% and 36% are the numbers that are traditionally used to be able to see if you can afford to get into a mortgage. 28% without credit card debt, revolving debt, and 36% with.
Right. And then there's the financial planning aspect of it, because you know you have daycare, you have other living expenses. So generally, actually, you know, I try to make that even lower because the limit is higher. But then you've got to say, okay, once I move to the house, am I going to be able to afford living in the house? Because there's a lot of other issues.
And that's the let's call it the operating expense monthly. If repairs are required, you have to budget for that too.
Sure, sure.
You may be looking at improvements that are required too that you don't want to lose sight of.
Right, absolutely. So it's just the ownership of the home, and then there's the regular living of, you know, if you have daycare expenses and other things that might be in the horizon. So that's great. Well, we covered a lot of items in terms of buying homes. Is there anything else that you'd like to suggest to our viewers? I'd just
like to offer your viewers, I do have a nice pamphlet from the National Association of Realtors on the tax credit.
Oh, great.
That they could obtain from me if they want to just pop me off an email. It's Bernie, my first name, B-E-R-N-I-E, at Fallon-Realty.com. Don't forget the dash.
Great. And we're putting your website on the screen so people can also check your website. And you have some links there for some articles that could be found in the web, right?
Yes, I do.
Great. That's terrific. And thank you, our guests, for joining us today. Our guest is Bernie Fallon of Fallon Associates. Talked about some opportunities in real estate market in 2010 during the tax credit and just preparing for buying a home and selling a home. Thank you for joining us. Until next time, I'm Nannette Nocon.
Thanks for tuning in to today's show. If you have any questions for It's About Money, please email Nannette at nnocon@aol.com. This program was produced through Penfield Community Television in Penfield, New York.